QuickBooks Pro Plus Desktop 2022 Bank Reconciliation Month 1 Checks and Cash Decreases. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View dropdown, the Open Windows list on the left-hand side, Company dropdown, Home page in the middle, maximizing to the gray area. Reports dropdown, Company and Financial, taking a look at the balance sheet standard. We're going to customize that report, changing the date range from 01/01/22 just to the first month of 01/31/22, and then go to our fonts and numbers, changing the font to the size of 14, and then we'll say okay, yes please, and okay. We're focusing in on the checking account up top. Now let's be opening up our bank reconciliation, which we started last time. Banking dropdown, we're going to go to the reconcile item. We had already entered our ending balance, beginning balance at that 25,000, noting the 25,000 does not match what's on the bank statement. We'll see that difference in the beginning balance and how we can deal with that after. Right now, we're going to be focused in on doing the decrease side of the account. So we're going to go back on over here. There's the 61,241, and here's the 61,241 on our bank statement. So we're going to be continuing on, and we're right where we left off last time. Going to do the same kind of thing over here to the checks, payments, or decreases as we did with the deposits. And as we do so, note that on the checks side, it can be a little bit more confusing given the fact that that the date is usually going to be more distance if it's an actual check that was written, meaning we're going to have written it before it cleared the bank, and it can take some time for it to clear the bank even under normal conditions, given the check has to be given to someone else, deposited in their bank, and then relayed on over to our bank that the transaction has taken place. However, if it was a check, we will have the check numbers. If it wasn't a check and it was some kind of electronic transfer, then it might be a very quick transfer, so the date will be more relevant. In that case, we won't have the check number in that case, so that's a takeaway, something that will not be as easy. But the electronic transfers generally also have memo information, often which includes the vendor name in it, which can make that a little bit easier to tie out as well. So just keep that in mind on the check side of things. Same process is that we're going to be going from the bank statement, imagining this is what we got from the bank, to the QuickBooks data, checking off from that way, not from the books to the bank statement, although you could go back and forth, but you always want to be thinking of going to the bank statement to the books, because that'll be a bit less confusing to you, because everything on the bank statement needs to be on our books, and if it's not on our books, we need to add it unless the bank made an error, which is quite rarer. And if it's on our books, however, and it's not on the bank statement, that's what we expect to happen, at least for a few transactions, because those are going to be our outstanding items that we wrote, outstanding checks that we have in our system that we know about, that the bank does not know about, and that's going to be our reconciling items. So we're going to start here with the check number 1001 for 12,000. If I go on to here, we're going to say there's the 12,000. This is obviously easier to do as well if you have two screens, or if you have the bank statement actually printed out. But so there we have it. But I'm totally green here, so we're totally green. So we don't have no printout or whatnot. No. In any case, we got then our check mark. It's the 12,1001. The date in our books is 1/4, and the date over here is 1/7. So you expect to have the bank statement date be a little bit later. And then these two, the 1,000 and the 4,000, those you'll notice are not on our books. And that's going to be a problem. We're going to say, well, how am I going to reconcile without those two on our books? And so I'm going to keep going without those. You'll note that those two are the difference between the 30,000 up top and the 25,000 that we put in the books as the beginning balance, because that's what we had in our bookkeeping system. So we'll get back to those later. Then we got check number 1002 for 16,000. Check 1002 for 16,000. Check, roger that, checked it off. And then we'll make that one yellow. This one's 1003 for 7,000. So 1003 for 7,000. Note the date, 111 in our system and 112 here. 1003 for 7,000. 6892, 1005. So there's the 6892. Notice it skipped one here. So we're on this one. So that could happen because it might not be in the exact same order, because note that your bank account might be in the order that it cleared the bank, or they might put it in the check order, but they're probably going to put it in the order of the dates that it cleared the bank, and the dates that they cleared the bank might not line up to the same ordering of the dates we wrote them, because some people might hold on to the checks more longer than others. If you have electronic transactions, then you would expect it to line up a little bit more closely, as the transactions should take place more rapidly. So we're going to say, all right, let's highlight that one. 72-1006, so we're looking 1006, 72, date on the 115, so that looks good. 115 on the date versus the 19 here, making that highlighted. 1004 for the 3780, big one. 37, notice that one's back up top here, so it's a little out of order, but same one, because this one we wrote on 114, and it didn't clear, it looks like, until 123. I don't know why you wouldn't run to the bank with that one as soon as you got it, I would think, but whatever. And then we've got the 1007 for 12,000, 1007 for the 12,000 on 126. And then let's do these two at the same time. We're going to get fancy here, try to memorize both of them. 620 and 15,000, we're going to check them off at the same time. 15,000, I forgot the other one. I failed. And the 620, there it is. Edison and the 110. So we've got all of those. And notice we skipped a couple at the bottom here, and that is to be expected. I'm going to hide the transactions that are after January. So now we've got all these transactions that are still in place that we have not yet checked off. We had one on the deposit side. We've got these items that are on our books as of January, but are not on the bank statement. Is that a problem? No, that's not a problem, hopefully, because we'll be able to check if those items have cleared the bank, because we would expect them to have cleared in the following month, which is going to be in February. We're going to be doing the reconciliation sometime at the end of the month, so we should then be able to verify that those items have cleared in February. And if it's just a timing difference, you might ask, well, why am I even doing this then? Because by knowing exactly what the difference is between our books and the bank books, which now will be the unchecked items when we do the bank reconciliation, that gives us a double check that all of the transactions we have done are valid, or are good transactions, giving us a double check and internal control over the, pretty much the whole accounting system to some degree. Okay, so that's going to be, now we don't have these two down here. I'm going to highlight these two, and we highlighted all these last time. Those were highlighted last time. So we can just go this one, this one, this one, and this one. So we've got all of that done. And so now we're looking down here. We don't have these two down here. And if it's on the bank statement and not on our books, we're going to have to add it to our books, is the general rule, unless we think they're wrong about these items, and they're usually not. So here we had a withdrawal that took place. That's us taking money directly out of, possibly with an ATM. And if we take money out directly with an ATM, then we should be logging it down in some way, because we can do two things if that were the case. We could be saying either anytime I take money out of my business from the ATM, it's for personal use, so I can then know, well, then it will be a draw. Or I can make the assumption that I'm going to, tell myself what I'm going to use the cash for a business use. And in that case, it's a little bit more difficult because cash doesn't have the same audit trail. So that means that we have to determine, what we spent it on, apply it to the correct location if it's going to be an expense for business. And then we've got the service charges, which are going to be items that are charged by the bank to us, which we didn't know about until we got the bank statement. So I'm just going to add these two items in place. I'm going to go back on over. So you could open up this item on the left. Now you might leave and save it here, or you could just kind of work outside, and then these items should pop up. I'm just going to go right into the check register now. I'm going to go company drop down, go on over to the lists drop down, chart of accounts, and let's just double click right on the checking account and say I'm just going to add these two items. They're both as of the end of the month, so I'm just going to say 01/31/22. I'll close the caret for now so we have a little bit more room. There's no account number, so I'm going to say just delete that. And the first one was a withdrawal. Now the withdrawal, if you're the bookkeeper, for example, and you're dealing with someone else like a client, and they draw money out of their account, what you'd like to do is tell them, hey, look, if you're drawing money out directly, it'd be best if you only did that when it was an actual, like a draw for you, taking it out for personal use, because then I can determine where to put it. If you're drawing out for business use, then you got to tell me where to put it, and it becomes a little bit more difficult. Let's assume that's what they did, and they just said it's for business use, but we don't know what exactly you spent it on. Well, then in that case, it would be, we're going to say, all right, well, it's going to be, the draws are 150, and we're going to put it to some kind of expense account. And again, if I don't know what it is, then I'd have to put it into like miscellaneous expense or something like that, which isn't good for an audit trail, not good to verify your expenses for taxes and so on. So that's why usually on the expense side, you want the record for the expenses, because for taxes, you'd like an audit trail for the expense side of things. So we're going to set it up though. I'm going to put it in, and next time we'll do it as a draw, saying it was be a draw. So it's going to be an expense item, miscellaneous expense. So I'm going to say okay, doke, and then just record that one out. And so then if I open up the caret and I go back to my bank reconciliation, we're going to say there it is. There's the 150. Check. Roger that. Checked it off. We're only off by 15 now. So we'll close. We're going to say 150 here. Let's go and yellowfy that. So now we got the 15 bank charges. So some kind of bank service charge happening. So let's go back to this is the one that you could put in place as you enter the data, like as you start the bank reconciliation, there's an option to put it there. But I think it's just as easy to just put it right into the register, and it's easier for me to kind of check everything off and make sure I've got everything tied out that way, in my opinion. So I'm going to say, let's just put this in place. We can call this the bank. I won't even put a name though. I'm just going to say it's a 15 decrease, and it's something like bank service charges. So they do have that. QuickBooks gave us a bank service charge. It's usually a fairly small amount, but I like tracking, how much the bank is charging me. So I want to have it there, and instead of grouping it in like miscellaneous or some other account. And so I'm going to say okay on that one, and then go back on over to my bank reconciliation and just check off. There's the 15 has shown up now, and now it's in balance. Now it's in balance at this point, which should be a little funny. You might say, well, how in the world is it in balance when I didn't check off these two? Meaning I started with a balance that was wrong. It was 25,000, and this one had 30,000. So my beginning balance is wrong, and I didn't check off these two items, which I would think I'd have to check off to be in balance, because usually the beginning balance would be in right, and then I would have to check everything off in order for the ending balance to be correct. Correct? That's true. But in this case, and this is common, if in this beginning balance kind of problem, this 30,000 up top is different than what we had in the books because of outstanding items in the prior bank reconciliation as of December in the prior accounting system. So there's a $5,000 difference, and of course that 5,000 difference is represented down here by the two items that we're going to say make up the outstanding checks from the prior time period that aren't in the system. So you could then note that, and you could just reconcile right now and say, okay, well, my beginning balance doesn't tie out, but that's because of those outstanding checks that aren't in this system, and I'm still reconciling, so everything would kind of be good to go forward from here. However, if you gave the bank reconciliation to somebody else and told them that, they might be a little confused because your beginning balance would not tie out. So what we would like to do instead really is adjust the beginning balance and enter these two items into our system, which we'll do next time. And so we'll enter these two in the system, but we'll do so as of the prior period, because that's when we actually wrote those checks before the starting point of this current reconciliation. And then we'll net that out to the 30,000 that is here, or the 25,000 here, so that we can see the detail of what is happening with that reconciliation process. So we're not quite done with this one yet. I'm going to just say leave for now, and we'll come back and do that next part next time.